All right, good evening, everyone. Futures Brizio here. Hope everybody's doing well. It is Wednesday night, August 6th, 2025. Hope you're having a good week so far. And I'm sorry I have not been making a lot of videos lately. Um, like I said, I don't make these videos to monetize a channel or anything, clearly, by the quality of the videos and the number of views and everything I get. I just do it for information and for anyone that wants to listen and take a little bit out of them. Great. And if that's you, welcome. And make sure you subscribe to the channel, smash that like button, and show some love and support. And if you have any questions or comments, leave them down below. So we'll just jump right in. I'm going to do just a quick review. This should be fairly short. I wanted to just say initially here, as I said many times, I trade mainly futures, but still some Forex. And I'm really trying to consolidate down the markets I look at. I don't feel like it's wise to trade too many markets because you just get too much analysis paralysis and, jumping around and having to look at this chart and that chart. And some people, I mean, God, in the old days, I used to try to trade like 28 Forex pairs, literally. I mean, on my MetaTrader, I'd have 28 pairs down at the bottom, and it was just silly. And so I don't do that anymore. And in fact, I'm basically down to 2 Forex pairs, which I'll talk about, and 2 to 3 futures markets, and who knows, I might cut that down even more. So we'll just jump right in here. And actually, let me go over to Forex first. And we're just going to look at the euro dollar and the dollar yen. And I've eliminated everything else just down to these two. Essentially because I'm in the US, I trade the New York session. And the US dollar is obviously the most actively traded currency during that time. I mean, probably is during London too. But in London, you're also going to get, the pound and the euro and everything. So the euro dollar, I honestly used to shy away from it a lot because I felt it was just because it is the most, I mean, the good thing about it, it's the most liquid Forex pair by far. I mean, the majority of Forex trading is done on the euro dollar. So it is very liquid. Spreads are generally very low no matter what broker you use. You're probably going to get like a 1 pip spread or maybe even lower during most periods. And so again, since I trade the New York session, that's the most active time for the dollar. And, I just feel like that's where I'm going to spend my time. And so I got the euro dollar up and the dollar yen, which of course, if the euro dollar is going up, the dollar yen is probably going down. I probably should do more like dollar Swiss because dollar Swiss is kind of the inverse of the euro dollar. But I like having a yen pair up there, so that's why I chose dollar yen. So I'm not a really big fan of dollar Swiss and just the way it moves. I think the dollar yen moves in better patterns. So, under normal circumstances. Of course, everything goes through consolidation phases, and volatile news events can throw things into chaos on any asset. But I just feel like these are probably the two best pairs for me. I will throw in a little twist on that when I talk about futures, but just really quickly on these two pairs. So clearly we're here moving up on the euro dollar. If we go to a higher time frame here, we do have what was looking like a downtrend forming on the euro dollar. We had this high put in, we came down, we came up, put in a lower high here, and then down. And then you can see we traded off of this demand zone right here. And one thing I wanted to point out is I see this a lot, and it doesn't happen all the time, but it does happen a lot. You see this area right here. A lot of times people will look at this when they're looking for price to kind of, if they see price pulling all the way back down towards what they call it, a demand area, if that's, or whatever you want to call it, a support area, and they see this kind of stuff, and they're looking for that last like bullish move that led to that new high. And so you look at this area right here. Well, you can see what price did. it broke right through there. All right, it just went underneath that area. This is the 12-hour chart. So I just wanted to zoom out far enough so you could see. But you can see, there's those lows, and you can see it broke under there. And what it did is it came down to the next little area of breakout, which was this area, because you can see this low led to this breakout high right here. And this one failed. So if anybody was looking maybe to go long right here, I mean, hopefully you didn't on this big giant bear candle, but maybe you saw this candle and you went long right there, okay, and you put your stop right under here, and this is a 12-hour chart, so your stop probably would be pretty close. Or maybe even they tried to go long somewhere on this bear candle on a shorter time frame, because at some point on this candle there probably was a pullback, and if it coincided with this zone, they would be looking to go long from there. But you can see what happened when the price started going up here. You can see it came down and retested this area. So here was the low, came up with this candle, came back, retested it, all right, and then it went. So for those that want to say supply and demand and like using up, quote unquote, using up liquidity in a certain zone, this is probably an example of that, where this area was already tapped into again. And so when price came back down to revisit it, it went right through that area. So if anybody had like buy limit orders sitting here, they just set like a buy limit. So when price tagged this area, they were automatically put into the trade. And again, they probably had a stop loss just underneath here, and you got stopped out because price went down 1, 2, 3, 4, wick down right here, and then it went. And we had this giant bullish engulfing candle right here that actually took out this whole one, right? This big bear candle. As big as this bear candle is, this bullish candle is even bigger. And so I always just say, when you're looking at these zones, especially if you're marking them out on higher time frames, say the 4-hour and up, always look at the price action at this zone that you're targeting, that first zone as you work your way back from this high. And if you see like where price has kind of already tapped this again, like this, where it went up, came back, tapped it again, and then went, I would be very leery about taking a long from that. And I would look at the next zone down here where I have this rectangle. And this was the last swing low or consolidation areas before this high was put in. So price consolidated, went up, put in a new high here, came back, and then eventually put in another high. So this actually becomes the valid area right here. And that actually is what price did, as you can see. Okay. Now, I don't know if this is going to just blow right through here and keep going. I have this rectangle drawn in here. This is obviously going to be a liquidity area sitting up here. Price will probably get into this area, and then we'll have to see it. You guarantee it's going to react off this area with at least a pullback. I'm not saying it's going to reverse, but just be cautious, because once it gets up in here, like back towards these highs, it is going to react and probably pull back. But, we'll have some market structure drawn in here on, say, the 4-hour chart or so. And as long as that structure is not violated, price probably will just pull back, maybe chop around for a while, and then wait and see if it pops through this area. Now, if we come up here and we throw a giant wick, I know this is off my screen. Let me shrink this. If price comes down here or up here, pops like a giant wick above this high right here, and then, eventually pulls back into the zone or below it, then that could be pretty bearish. But if we get a solid candle close above these highs, especially on a higher time frame, I like to look at minimum of a 1-hour chart, because you can get like a 5-minute or a 15-minute candle to close above the zone. That doesn't mean anything. I like to see a longer time frame close above the zone. So at least a 1-hour, maybe a 4-hour candle is even better to close above these highs. And if we see that and get like a solid close near the high or no wick at all on top, then that's, showing you that the buyers are strong and they're going to just pop right through this area. But if it throws a huge wick, especially on a higher time frame, and closes back inside this range, then be cautious for that for a potential reversal. Okay. But I just wanted to point out that, this area here and this big move back towards these lows, and where it actually turned. It wasn't here. It was down at the next low. So watch these areas when you're trying to look at what we call demand. And this can happen on any time frame. As usual, though, the higher the time frame, the more reliable it is. But you can see this type of situation, you know, on any time frame. The market is fractal. Just watch for, you know, what happened at that level before. And if price, you know, started pulling out of there, came back and retapped this zone again, expect that this will be a buy trap right here to trap buyers into going long at this level, or having like buy limit orders set here, only to have it just go down a little bit further, take people out with stops, and then the real move comes. Okay. And if we go out to higher time frames here, especially if we go out to the weekly chart, I do think that this market has plenty of room to run to the upside, which is why I'm still pretty bullish, even though we might run into some short-term selling once we get to that level. If we look here on the weekly chart, which I don't really like going to this chart, but this high, but it does give a very clear, you know, action here. So here was a previous swing. We went up, made this low, we pulled back, made this swing. So to me, this becomes our new swing low to work off of, which means this probably will go up and make a new high. And if we look way to the left, there's really nothing to stop this from going higher until probably at least, you know, up in here where we had this big bear candle come down. There's probably some you know, selling that will happen, but that's right up here near this high, and that's a long way from here because this is a weekly chart. You're talking 475 pips away minimum. So I do think this will make a new high as long as we hold this structure low on the weekly chart. So that's the euro dollar in a nutshell. So I will be, again, coming back down to the 4-hour or the 1-hour chart, looking for pullbacks, you know, of some kind here, and then a resumption of the uptrend. Okay. And like I said, just be cautious as we approach this zone up here, even though I think price eventually will pop through this area. I think if you're long anywhere in here, this is a good management area when it gets in here. Or either, you know, lock in some profits just in case, or, you know, I probably wouldn't be buying as price approaches this area. So if you're not already in, if price gets up into this zone, I would wait, and then, you know, assuming we get a strong pop through here, then maybe look to reestablish a long position. But if you're already long, this is a good management area up in here. Not saying exit, but just, you know, if you're in profit, maybe move your stop up a little bit and just protect your position. Okay. All right. So for Forex, the last thing here is the dollar yen. And again, if we zoom out to the weekly chart, although we didn't break this structure here on the weekly chart, you know, if you want to look way out here on the weekly, this price action going up here does look really kind of crappy. Now this, again, this is a weekly chart. So we jump down to the daily chart. We do have this structure sitting here on the daily chart. You can see we came up to this last major swing point on the daily chart, and we came down, made this new low, and we've just been kind of correcting up. One thing I always point out, and when I used to trade more Elliott wave, this is something I'd look at a lot. It was like, what did it take for price to get to here as opposed to going from this low back to this high, right? And so one thing to look at, this took 17 daily candles to go from this high to this low, 17 trading days. Well, how long did it take you to go all the way back there again? So we're going to measure from here to this bear candle here. It took 73 candles, okay? So what is that? 4 times? It took 4 times longer to go from here to here than it did go to the same distance from here to here. So to me, that screams corrective price action, okay? That screams corrective price action because how long it's taken to get up here. I like to use, you know, minimum of 2 to 3 times more candles to get to, you know, in a corrective move versus an impulsive move. All right. And those are kind of Elliott wave type terms. I don't really trade Elliott wave anymore, but I still use some of the terminology. So, you know, if this is an impulsive move, this is a corrective move. and you can see it took 4 times as long to retrace this area as it did to get here. So there was a lot of selling pressure and big money pushing price down, not so much going back up. Okay, we zoom down a little bit. I kind of mark this area as maybe an overhead. I wouldn't be surprised if price breaks through here and goes up a little bit higher, but this could be an area. You can see where price came up here, revisited this area once. Now, if price ever came down, came back up here a third time, it probably would break through because we would have like equal highs here. But this is the first revisit after making a new low. This is the first revisit back up. And so, and since the higher time frame is down, I do expect to see this break lower, but you know, we'll see. And again, if we go out to a little higher time frame, here's the 12-hour. Obviously, as long as this structure is in place down here, you know, even though the longer time frame is bearish, this, at least this corrective move is still bullish, you know, because this market structure here on the 12-hour or the daily has not been broken. But I mean, if you look at this gigantic bearish candle right here, okay, and you know, the higher time frame trend, I'm leaning more towards bearish than bullish, and especially again considering this is going to be kind of the opposite of the euro dollar, which I looked at as more bullish. Now it could just be confirmation bias, you know, you kind of like, okay, well, this is what I think, so that's what it is. So I never, I try to keep that out of my mind, but just again, looking out at the daily, in this case, the weekly time frame, I do think there's a case to be made for further dollar weakness right now. Okay. So anyway, so that's Forex. And again, that's all I'm going to talk about with Forex. And so let's jump over and look at some futures really quick. So this is crude oil, and crude oil continues to make some really good patterns down here. I really thought it was going to get caught up more at these lows right here, but as I said on the about those other charts, the more price pegs an area like this, the more eventually a higher and higher chance it's going to eventually break through. Now there is another what I would consider to be an even stronger level right in here around the this is around the $63, high $62 range. You can see price came down here, acted as support in here. It came here, acted as a little support, and then popped up. Here it was resistance, kind of resistance here. So either way, this is an important level. So we'll see what happens as price approaches this level. Now, if we get through here, and I mean like through these lows right here, like the lowest part of this range, which is probably way back here, then certainly, you know, I will continue, I think, to run lower. But I mean, these prices are, you know, pretty low to begin with. And I'll look at the, let me move myself over here. I'm going to look at the cash price of oil when we go to my trading view chart. Okay. So although I think short term, we could still be bearish on oil. You can see what's going up right now, but you know, it's the after hours session. And you know, you can easily say right now that on the 4-hour chart here's our market structure level. Get rid of this arrow. Okay. So here's our structure on the 4-hour, as long as this area holds. And I like to look at like medium time frame levels. So that's why I like the 4-hour. This is a very clear swing that led to this low. If price comes up and, you know, finally smashes through this one of these swings, that would change direction. But in the meantime, as long as it's trading under here, I think the trend is still down for sure. But just be cautious because of, you know, this $63 approximately zone here has been very reactive in the past. And the prices are so low now. It's not that they couldn't go lower, but I think it would take a lot to push this lower. But I mean, it's not a contract low. I mean, we have contract lows back all the way down here at what is that, like $56, around $55, $56 down here. So it certainly could go lower, but this is our next kind of layer of support to look at, which has acted as previous resistance. And I do think just by looking at this, buyers certainly will make an attempt to protect this area. It's just a matter of whether they can or not. I'm not saying they will. We could smash right through there and just head down, and we could look at the next swing area. If that happens, then the next area to look at was probably right here, at this pullback, and then ultimately down at the contract lows if it makes it that far. All right, so that's crude oil. So this is the Euro US dollar futures contract. Okay, so this is not your Forex spot account. So when you trade Forex, Euro US dollar, Euro USD, that's what they call the spot Forex, which is kind of like the cash price, like today. But you're going to find the futures chart is almost exactly 100% basically identical to the spot Forex. The reason why I have this up here is because my broker allows me, my futures broker allows me to trade the Euro USD futures. And so if I want to, if I see a good setup on Euro USD, then I can also take it on my futures account as taking the futures trade. So this is the September contract. And again, if you look at this chart and you look at the spot Forex Euro USD chart, you're going to see they're pretty much identical. It might be some slight variations in the candles, which is as much the broker difference as it is the price difference. But overall, the patterns are going to be exactly the same. So my analysis on this is exactly the same as I went over before on the Euro USD on the spot chart. Okay, so I'm not going to dwell on this, but that's what this is. This is Euro USD futures. Okay, and then lastly, this is a market I used to trade, and I got away from it. But I'm playing around with it again, at least on my funded account. This is my personal account here, so I'm not sure how much I'll trade it on my personal account, but my funded account is bigger. And so because this market allows you to, I mean, it's one of those markets where, if you're wrong, you better be careful because, there's a very high tick value. And this is live cattle. And this is the hourly chart. I actually did take a trade on this today. I got out really early. I ended up getting out over here because it was, I don't know, because I saw this candle forming and I just decided to get out. But I got in down here. But as you can see, I left about half the trade on the table. We are approaching a swing high, a recent high right here. So I do expect we'll probably see tomorrow some kind of, we may like wick through here, but I expect to see some kind of larger pullback off of this zone. So I'm not sure if I'll be necessarily looking for long positions on this tomorrow, but we're going to check the cash price in a second. You can see these are all-time highs. So if you wonder why your burgers and steaks and everything are so expensive, this is why. Live cattle prices are literally at all-time highs. Even when you go in, we're going to look at the cash chart, you're going to see there's no recent high that matches this. Okay, this is the futures chart, but even on the cash spot price, there's no top. Okay, so now let's just jump over quickly to that, and we'll look at the cash price for cattle first. So since we were just talking about cattle, now let's zoom out here. This is a weekly chart. This is a weekly chart of cattle. So cattle, at least on my broker, they started tracking this. Now, it's been trading longer than this, but my broker only shows this back to June of 2021. So at least in over 4 years, price has never been this high. And you can see, really, it's been on a tear since the summer of 2021. I don't know before that. I don't have price any further back. This is Pepperstone. I just went into this search symbol in TradingView. So if we put in live cattle, maybe we can find a different feed. Let's just take a look while we're talking. We're looking basically for for cash price, live cattle. This is all futures. Well, I don't want to delay the video here. But anyways, the bottom line is we've got at least 4 years of price running up here. So, you know, again, we have pretty much the same pattern on the cash price. So again, we're approaching this swing high. Expect at least some kind of pullback on this. You know, the kind of the 4-hour swing point is right here. So as long as we maintain this area right here, I still remain bullish. There might be some short-term pullback, but even maybe back towards this zone. But as long as this, to me, as long as this 4-hour zone holds, then we're still in an uptrend. But once it comes up here, I do expect at least some sort of pullback back towards this area. It may not come all the way back, but expect a pullback towards this area. All right. Oil we talked about on my other chart, but we'll just look at the cash price here for oil. And you can see I have that same. Now, this is interesting on oil. On the cash price, which is what I'm on now, you can see CFDs on WTI crude oil. So this is basically the cash price. Look at the difference on here. I drew out this zone. And remember what the 4-hour chart of the futures, let's look at it. The 4-hour chart on the futures did not, you can see it didn't come down that low. You see this low right here? Okay, you see this low right here? Let me zoom in. And this is what I showed you on my MT5 account. But see this low right here that formed today? But then we still have, but I told you, I drew out the extreme of the zone, which is down here. Okay, here's the extreme of that zone. This is what I drew on my MetaTrader account I was showing you before. But if you look at the cash price, it's the same pattern, but look, price actually did come down to this low and wick through it right here. See this wick that occurred, and this was earlier today. This is a 4-hour chart. So this was, you know, late in the session today. Price pulled through this area and then snapped right back inside. And now again, this is the overnight session, so I take this with a grain of salt because this is a very thinly traded session. I'm not ready to just say that this is a reversal. But look at this wick through this zone and then snap right back, and now it's come out of this zone, is moving higher. So if we get follow through on this tomorrow, once like we get to London and into the New York session, then I would begin to be more interested in watching for longs. But again, it's the same situation as I showed you on my futures chart. As long as price holds this area right here, here's the last swing that led to this low, we are still in a downtrend. But I just wanted to point out, that's why I like looking at the cash prices, because if you look at this cash chart, this looks a lot more of a bullish potential reversal here. And I say potential, guys, because, you know, we haven't voided any bearish momentum yet. Yes, we appear to have bounced off of a major level, around $64 here on this chart, on the cash chart, which is a little different. I think we were at what, 62 or 63 on the futures chart, but the pattern's the same. But here we wicked through that level and now look like we're trying to push higher. So again, we might just come up here, roll over and break right through this low, in which case then we definitely will see lower prices. Again, probably back to at least this area down here. But if this holds and we continue to move higher, we maybe come up here, put in a higher low. Let's say price comes up, tries to roll over, comes down, puts in a higher low, and then moves up again. That would be my first sign that maybe we're seeing a reversal. Okay, so keep an eye on crude oil. I think we're at a critical area. Again, doesn't mean the trend's going to reverse, but I would keep an eye on it, and I'd be cautious with short positions right now until if and when we take out this low that wicked down through here today, this low right here. Okay. All right. So then the last thing, again, here's that micro Euro FX futures. Okay. No, so this is different. Okay. So I told you my broker allows me to trade Euro USD futures. They also allow me to trade Euro FX futures. So what's the difference, you're asking? Well, the difference is this is just the euro. Okay, this is just trading the euro futures. There's no USD. This is not a Forex pair. You can trade, as I mentioned before, Euro USD futures. And of course, you can trade spot Forex Euro USD that everybody knows. But this is Euro FX. So this is just the euro futures. And you can see it right here. Okay, up here. Here's the name of the market right there. Okay. Get rid of that arrow. You can see it up there in the upper left corner, Euro FX futures. Okay, so this is just the euro. But again, it is basically the identical chart to the Euro USD, even though it's only the euro. So the reason why I like to trade this is because my broker, although has Euro USD futures, they're only micro accounts. Okay, so they're very, very small. They're perfect for someone that's just experimenting maybe with that market and you don't want to put a bunch of risk on the table. I mean, you can put on a Euro USD futures micro account trade and risk, like, you know, even with a decent stop loss on a 1 hour chart, you could, you know, you probably only be risking like $30 or $40. So they're very low risk trades. But the thing is, so if, you know, but if you want to put on a larger size, then you got to put on like 10 or more, you know, micro contracts to have it equal one standard contract. And my broker only allows the micro. But they do allow Euro FX futures, which is just the euro, which moves almost identical to the Euro USD, and it has a much higher tick value, like 5 times higher. I think the tick value on the Euro USD futures is like, I think $1.25 a tick, whereas this is like six and change, I think. So it's like 5 times the price. So of course, you know, that's leverage and it cuts both ways. You know, your risk, your reward is potentially higher, but the risk is obviously higher. So the bottom line is, if there's a trade on Euro USD spot, then there's a trade on Euro USD futures, and there's a trade more than likely on Euro FX futures, and any combination of that. If there's a trade on this market, Euro FX, that same trade is probably staring at you on the Euro USD micro or spot Forex, Euro USD. Okay, so even though it's 3 different charts, it's the same analysis. If there's a trade on one, there's a trade on all 3. I'm not saying I would take all 3, but I probably would take 2, because if I like it, I'm going to take it on my Forex account and on my futures account. Just on my futures account, I have 2 choices. I can either take the micro Euro USD and just, you know, maybe throw extra contracts on, or I can just trade the Euro FX futures and get a bigger bang for the buck. I guess it just depends how I feel about the trade. All right, so I did want to point that out. That's the only difference here. But again, if you look at this chart, this is the Euro FX futures versus Euro USD, which is right here. You can see very little difference between these 2 charts. Okay, look at it again. Here's the FX futures, just the euro. And then here's the Euro USD. You can see pretty much the exact same chart. So there might be subtle differences, and that actually might help with the analysis of one versus the other one, but it's basically the same chart. So anyway, so I'm not going to go through analysis because we already talked about the euro. All right. So anyways, interesting thing to watch is oil off of its current levels right now. I mean, not tonight because I don't trade the overnight session, but going into tomorrow for sure. I'll see when I wake up tomorrow what happened during the London session. That will give me a lot of hints as to what might happen the rest of the day. And then cattle, like I said, be prepared for a short-term top in cattle. I mean, it's been just going up for so long. I don't know if there's any reason for it to turn around, but as it approaches this high, which it probably will do tomorrow, even if it gets any further, it may reverse right off this level. Be prepared for at least a decent sized pullback here on this market, but as long as the structure level holds, the uptrend's still intact. But I'd be cautious on taking longs from this level because we will see some at least pullback here as price approaches this area. And this is not a market you want to get caught on the wrong side of. Okay. And then, like I said, the euro, no matter what's Euro USD futures spot or the FX futures, I'm still remaining bullish on that for now. You know, as long as, you know, as price approaches this area, I do expect some kind of reaction from here. But again, longer term on this, I still think there's plenty of room. Again, back to the weekly chart, we have this swing area. I do think there's more area for this to run. Okay, which then, of course, would make the US dollar yen bearish and the Euro USD bullish. Okay, so we'll see. All right, guys, so I'm going to leave it there. We're at 35 minutes. I talked enough. So I hope that made sense and get a little bit more what I'm thinking. And, you know, for me to be able to scale back the number of markets I'm looking at. So basically, what am I looking at now? 1, 2, basically 4 markets. I'm looking at the US dollar, yen, the euro dollar, cattle, and oil. That's it. And the euro dollar, like I said, there's 3 flavors of it, but it's the same analysis on all 3, so I just consider it one. I just have to look at one of the 3 charts. I'm going to get the same picture. Okay, so basically I'm down between futures and Forex. I'm down to 4 markets, and I might even consolidate that more as we go forward. You know, it allows me on these videos to dive a little bit deeper into price action theory, which hopefully I did that well tonight without having to like jump to 5 or 10 other different markets. And it helps me during my trading during the day, where I can just spend the morning from the early New York session through mid-morning, and I'll know if I'm going to get a trade or not pretty, you know, within the first 2 hours or so that I'm looking at the market. I know if I'm going to get a setup on anything or if it's just going to be a no trade day. So the other thing is, you know, just trying to keep some diversity in the market, you know, having an agricultural futures with cattle, having an energy market with oil, and then having a financial market with the US dollar and the euro and the yen. I think I have, you know, a decent smattering of a few different markets I like. I've gone away from things like natural gas and 10-year yields. I know I had, you know, those up there. You know, the other Forex pairs I was looking at, like Euro AUD and GBP USD. GBP USD and Euro USD are basically identical. If you put those 2 charts together, you'll see they're almost the same. I just ended up standardizing on Euro USD because I still think during the New York session, it's a better market to trade during the New York session. During London, I think you can just flip a coin. But during New York, I just prefer how Euro USD moves. And it's a good pairing with the dollar yen. So anyway, so that's it, guys. Make sure you smash that like button on the way out. Questions or comments, leave them down below. Subscribe to the channel. And I promise I'll be back sooner. And I'll keep you informed on what's happening with these and, you know, where my head's at with some of these markets. All right, guys. Hope it was helpful. Take care. See you in the next one.